Good day everyone. Today it's educational video day, but it's not going to be with a PowerPoint slide because I just wanted to give you my idea about the markets in the form of what social media and sentiment can do to your emotional decisions, and just go through the past few weeks in terms of expectations and how people are reacting to it. So if you like this content, please subscribe to my YouTube channel. Also, do not forget to like beneath and comment if you want to see some special content, as next week we will be going further with the educational content, as you might know. But in general, what did we see? Well, first of all, we had FOMO. Before the crash happened, we had lots of FOMO in the markets. We've got meme coins taking over the entire place. And now we've got a crash that caused people to become very panic and to become bearish at supports. What's usually happening after is that you get a period of consolidation, which is a range-bound period. And within such a range-bound period, you get the nature that the market is or you get the habit that the market is ultra bearish from here onwards. But also, you're flip-flopping in between sentiment. And in the past week, we've been flip-flopping between sentiment because people become bullish at resistance and bearish at support. While if you have real cojones and if you have real fundamental desire or like expectations from the market, and you look at it from an on-chain analysis, you can see that crypto and digitalization and decentralization is the actual future of the market. So the idea of what I see on social media is the ultra panic, but also ultra euphoria. It's either black, either white. There's never a gray perspective in between. That's why I'm also wearing gray today, because there's also just layers in between. You don't have to sell it all at once. You don't have to move all your money at once into a cryptocurrency. You don't have to buy everything at once or sell everything at once in general. You can just scale in, scale out. Also, what you see on social media is usually just a snapshot of that exact moment, and you have got the habit of making decisions based on a snapshot. So when a certain crash happens or when the market starts to drop south, that doesn't mean that that is the actual close or that's the actual low, because it's just a snapshot within a week. And you've seen that during the week you have pretty heavy momentum and heavy movements, but they always come back to earlier price action. So you should be relying on the concept of understanding price action and data, and you shouldn't be relying too much on news or social media, because social media and news is gathered from snapshots of the markets and they make it extreme so they can get clickbait. This is also what I do on my YouTube channel, because then I get more views. So what you should be doing with your positions in the markets, if you have bought way too high, it's time for you to start understanding that things don't go up in a straight line. Second, if you have a position that is underwater right now, or you've got it for a long time already and you are just getting fueled by ultra negativity as there's fear in the markets right now, you should realize that it's just a snapshot once again. The sentiment can change quite fast, especially once the market starts to climb back up. You will see that the sentiment is going to flip more often. Then next, you see that people are expecting Bitcoin to hit 12K or 15K, fueling that fear that you have. I think social media is a very great tool to get educational information and to become a better trader, but it can also just influence you in the wrong way. So at all times, have a plan. And adapt to that plan. Have a long-term horizon. Have a low time preference instead of a high time preference, because the majority of the people getting into the markets have a perspective that they will become a millionaire within the next few months. But it's just taking time. Trading and investing doesn't go in one way. So have a plan. Be relaxed. Don't listen too much to social media. Always derive your entry points based on historical price action, and just do the opposite as what the mass is doing in general. And I've got a chart up here, and I just want to rely on charts in itself. And this beautiful example is Cardano at this point. Cardano at the beginning of 2021 was around 20 cents. Since then, we have been seeing massive run-ups, but we have also seen that during those run-ups, we've got a few corrective moves in general. Those corrections did they were quite harsh. I mean, 30% corrections are quite severe, right? Even a 40% correction. But in general, the structure remained valid. Now we've got a very hard breakout to the upside, and the price immediately came south. So you can see that what should we be holding? That's this line up here. So the recent low, which is this one, that's what we should be holding. And then you can see that the price is bouncing in between levels based on historical price action. So we can see that the previous support becomes resistance. We test the low again, we bounce back up, and we're going to make a range bound construction here in which compression is being built up. But in that period, so when it comes here, you will see people becoming bullish. When it's here, you see people becoming bearish. What's the nature of the average trader? They buy here, they sell there. So you have to start understanding how the psychology of a market is, in which you should become inverse of that most of the times. So during this range bound construction, you will see that people become bearish at supports, bullish at resistances. And if you derive the historical price action points from these levels, your entry point is way better than 80 to 90% of the traders that you're actually trading against. So that is what you should be looking at, because once it gets in those ranges, people will be expecting the price to drop even further south. So my educational lesson of today, it's quite small, but my lesson of today is to stay neutral, stay patient, stay disciplined, make a plan, avoid everything that's news related or anything that's related to the markets in general, and start evaluating yourself and start developing yourself. So I'll be back tomorrow with a new update, and I'll see you again soon. And don't forget to enjoy the weekend.